Hi, it's David here with Futures Trading. I want to thank my newest subscribers for joining us. In the last video, a day ago. So a day ago, we had roughly about 116, I believe. And so thank you for coming on board. Thank you for joining us. And here's something that I want you to consider is that I do not pay for subscribers or likes or followers. I don't do any of that, comments of the sort. I don't do any of that. It's deceptive behavior. That's number one. Second of all, I will not pay to give you priceless information. I won't do that. There's a lot of YouTube personalities. I'm not one, but there's a lot of YouTube personalities that use deceptive behavior to draw your interest. If what they're presenting is priceless and can get you where you need to go, then why should they invest money in it? Um, and in regards to it's you wanting to learn. So if you wanting to learn, you should just allocate the time and of course I guess the initiative to want to support what's causing you to have difference in your trading. And so that's why I wouldn't do it. So you're here, and I say this because you're here because of fate. There's someone here that may have suggested that you come and visit, or they have been hitting the like button, and the algorithm has identified that this is a safe place to learn, and so they suggested the video to you. And so you're here by fate. All right, I did not use any kind of method to get you here. I promise you I didn't. I'm just uploading content and trying to, of course, inform others that's here of the professional etiquette. And so when you're a professional and you practice the right etiquette, you show politeness towards others that's in your profession. And so I already have a lot of traders here, but I don't have a lot of professional traders here. Now, if you're a new subscriber, if you would like, can you please make sure that you care about someone else? Because someone else cared to get you here. They cared enough to get you here. And I know I have at least 4 to 5 people that commits to liking the content, even though they may already know what I'm gonna cover. Well, they're not gonna know everything that I'm gonna cover because I give targets too. But for the most part, just the foundation of the channel, they know the information and they still will like it because of their experience with the content. And so if they cared enough to have you here, and that's kind of the community I want to build. I want to build some professionals, of course, that practice the etiquette, not just making money, but actually practice the etiquette of being a professional, showing the level of ethics that's associated with being a professional, just like every other field. There's doctors, lawyers, scientists, physicists, all the other professions in the world have a level of respect and regard towards other. There's a level of politeness. And so I'm trying to, of course, get the community to reflect just that. Of course, profitable traders. I want everyone here to make money. Okay, I mean it's no secret. I promise you, that's what we're here for. But that is the least of my concern. My concern is I don't want to just have a bunch of selfish traders following me. Okay, I want to make sure that I'm helping people grow in this field, well-rounded individuals that they understand what's important. And so we want to welcome you. Thank you for coming on board. And if you can, support the information moving forward, even if you, of course, learn it straight away. You might learn it fast. If you don't mind, still hit the like button or just leave a comment and say, I'm enjoying the content or something, so we can get more people to come because we're trying to grow this channel really just based on fate. We want people that needs to be here. All right. So this morning we're gonna cover some information. This morning I put out a target, well actually several targets here, and I gave you some no close levels for the daily. So they're almost to this target, if not already hit it. And so I put it out here. Okay, so I put the information out here. They need to close above this 26 today. They really need to get this done. So I hope they don't just run up and then come back down by the end of the day. So let's see if they can stay above that 26 today. And then moving forward. Now here's moving forward. Should they not get this done, moving forward, we want to get them to stay above here. Okay, so that 47, we just really need them to stay above here. Really important that they do that. So let's see if they can get that done. Yeah, see, that's the problem right there. They came really close to it and they're heading back this way. So now, again, these are a couple targets here that they made on the way up today. They made these targets on the way up, not today, but yesterday. And these are the targets from before. All right, so some targets down there from before. All right, now We just need them to stay above here today. That's all. So hopefully they can get that done. If you would like these ranges, all right, you're more than welcome to the template. I've been trying to give you guys some free stuff. All you would have to do is use the email below the video and request it. And I would absolutely send it to you. And if you don't mind, have the right etiquette. This just say thank you. That way I know that you received it. And then also, of course, it shows the professional ethics associated with being a professional. There's a difference between trading and being a professional trader. It's different. Now, there's a lot of traders, but there's not that many professional traders. And so you can get these ranges. Really important. You can see it's all about the midpoint. Again, I spent many years of my life to do this professionally. So I picked these times for a reason. It's really important that you understand that this is not some random stuff. It's not random at all. And again, you'll just want to use the ranges. All right, the mid of the ranges is really important. All right, so you'll want to take a look at that. I don't have as much data in there, but and also here's the static levels. This is a free indicator. I just give you the time windows to know what they are. So if you want that range, you can get it. The static levels, again, it's a free indicator inside an indicator. I just recently figured out that hey, you can actually use this indicator to draw these lines, but it just don't cover the stop placement on some of the levels. That's all. So from 25 down to 15, that would be your stop one tick outside of 15. And then from 15 down to oh 05, your stop would be at 475. Okay. And from above, it would be 85 to 95, one stop out of 95, and then 95 up to the oh 05, and then the stop one tick outside of oh 05. Now, if they manage to go past the static, they pretty much owe you the next one, but the target is always 55. So that's the blue line. All right. So and I'll scroll through the chart just a little bit to kind of give you an idea of how to, just look at it. So here's your bounces, and you're always trying to get to the 55. That's really important. All right. So if you're close to this one, they may don't want to just go to that one. They go into the next one, and they may turn cyclical on the way. That's all. So just kind of use that information, if you will. I'll scroll through it as much as I can. You can see they kind of just hovered at that 55 there, broke out to the top, then came down back near the one down here, and this is kind of where they took off from anyway. So that's the information there. And again, you're more than welcome to have these static levels. All right. So let's kind of look at this daily real fast. And then we're going to look at another chart, and then I'm going to let you go. All right. So they're bouncing. Let me just go over why they're bouncing. We still have this no close level here. All right. So we still have this no close level here. And as you can see, they ran under there and turned around. All right. So, and then of course from above, they did stall out here. This is a no close level here. They stalled out for a couple of days, kind of gave you some of that action there, and we got no close levels from above. And that's why I'm telling you they need to get up here and close. This is a real participation bar. And we're going to talk about that word participation because it's very important. So the green bars, red bars, really important. And that's a no close level too. So you may don't want to do that, but I reached up a little higher. So, but here's the scenario. I put this in the last video. I put it here because I want to help you understand why it all works. I tried to draw the pivot, well, the runs, if you will, the runs, pullbacks, and then the runs in relation to the candles. So I'm trying to give you kind of like a broader view of it all, the run, the pullback, and then the run. And I did the long scenario because the market is trying to get back up. So if you have sellers trying to force the market down, majority, we went over the word majority, logical majority in the video before. The majority is more than half of the sum of the total. So it's more than the total, just more. 50, it can be 50% and then more. Just one person would make a difference. So majority is just more than half. It's more than half the total. All right. So they try to force it down here. And clearly, if they could, they would have closed it lower and it would have went down. But majority stepped in. So more than half stepped in and actually got more than half of the total of this bar above the high of this one. All right. So I just want you to kind of keep that in mind. Majority stepped in and got more than half of the total of this bar above the high of here. Okay. Now the result is this. So more than half of them in this bar was able to push it up, and now you got more than half of the majority is above this high. So just kind of look at the bars like that. It's really simple. Now, if they would have closed price lower and it would have went down clearly, but it didn't. All right. So really important that you understand how to take your trade. So if you ever was trading, and this is why it works. If you ever were trading, all right, so let's say you had a base or something down here. All right, so if you ever were trading and the midpoint of this run can get above this high, if you ever seen the market come down, get up under there and then take right off where most people would try to buy the midpoint, and try to get it to go because they want to buy the midpoint of this run and then it don't work. And everybody will yell, "Oh, there is inducement," and and they try to make you think that the market is attacking you in some form and trying to trick you into going the wrong way. It's really not that. It's just buying and selling. You're buying and selling, somebody else buying and selling, and somebody's store is just doing better than yours at the moment. That's all it is. It's really simple, but I get it. I get it. It's a victim mentality that we tend to have towards the market, but it's really not that. It's really not. People can have their opinions about it, as I have mine. So because there's no punishment, and I think most of the time when people look at the market, they tend to think that the market is punishing them because they always associate it with discipline, but discipline deals with punishment, and there's no one on the other side of your trade doing absolutely anything to you as a place of opportunity for the most part. But we're going to talk about some of the other facets of how it works. So there's no punishment. No one's punishing you when you get stopped out. It's not. You're just in the wrong place. So I want to kind of let you know where the right place to be at. So this becomes the no close level. Okay. This becomes the no close level. This becomes the no close level. They'll go up under it. But the real participation is down here. All right, so now that we've covered that, let's take a look at this other information. Again, here's the static levels. I was able to draw the zones up here. I didn't put the levels. We've been doing zones, so I'm gonna keep doing it. And so if they're not going to come to the 55 here, the 550, then they must be headed to this 550 up here. And of course, that'll be the trend distance. And here's another tip for you. Oftentimes, when you get trend distances that fail, whenever the market goes to turn around, they tend to go to those. All right. So just a little tidbit for you. But they should go to this 55. That kind of makes sense for the trend distance here because they have a trend on the board. So even if they pull back, a trend, if you're new to the channel, is 7 bars, seven, closing higher. So you got to just start with the first green one if you're going up, and then the next green one have to close higher than the prior green one. And you don't count anything in between. All right. And so one, two, three. That's three. That's not seven. So they still bullish and they can go up. Make it simple for you. All right. Now, 5 second chart here. Want to make this really quick so you can understand this content and go ahead and get your trading to work. Really important. Now, the purpose of the channel, and if you don't mind, support the information because someone cared enough about you to get you here. All right. And I care about you too because I really want you to be able to succeed with trading. Procedural knowledge is important. This is what I'm trying to get on YouTube. There's so much stuff going on YouTube. And again, I already ran a company online, took a company offline because I don't like what the trading space is becoming. And since being on YouTube, I'm starting not to like it here either because there's a level of just I don't know. It's so I don't know. It's just so selfish here. There's people that just won't support what makes sense, and I think that's unfortunate. But procedural knowledge relating to, okay, procedural is the key word, related to an established or an official way of doing something. All right, really, really important. So, and I said it before, if you cut off the light, you no longer have the light. The function of what made the light available was, of course, turned on its head, and now you don't have no light. And so it's really important to understand function, really, really important to understand function. Here's another analogy that I've given in the prior video. If you're going to build any edifice, I don't care if it's a house, dog house, I don't care if it's a building, the architect and the builder will have one tool. I guarantee you, both of them will have it. Okay, I guarantee you they'll both have it. There's a level. They'll have a level. They need to make sure that what they're building have, balance and that it can hold whatever it is that it needs to hold and protect it from all of the elements. Now, you need to have an understanding of how to use a level. That's why I'm here. That's why I'm online to make you aware of how to use a level. And you don't have to be 30, 50 years into this business to be a professional trader. I can tell you just something simple and have you understand it that you can again exercise discretion because we're self-directed. So you can use a little bit of discretion and still get the same results as someone that's been doing it for many years. And so there's no difference. I don't believe I'm better than you. I don't do any of that. That's egotistical foolishness. And I don't participate in that type of stuff. I want you to know that you yourself can trade just like me every day. And anybody else that trade professionally, you can trade just like them. Anyone that you may ideally say, hey, they're great traders. You can trade just like them if you knew what was important. So you just have to know what the level does. The level allows the house or the edifice or the doghouse, the birdhouse, whatever you're building, to actually remain intact and hold what it is that it's meant to house. And so I want to show you what a level does. Now, you can have this chart scale too. We're going to take a look at this before I let you go. You can take a look at this chart scale and you can have this too. I'll send it to you in the email. As far as the no touch, no close bar color, okay, now this is a 5 second chart, but as far as that color, the bar coloring, I can't just outright give you that for free. I can't. It took me a little while to learn how to code, and just a small token of effort on your part, you can absolutely have it. I'm not here for that, but you can absolutely have it for a small cost, very small cost. So much so, yeah, you'll definitely get it back within just maybe a trade or two. Well, actually, just one trade. Just depends on which time frame you trade. Try trading a 5 second, maybe two trades. So you can get it back. So if you want, it's totally up to you. And there's several functions there. I'll list them below the video. Again, you can have it if you want it. But it's participation. That's what these bars are. They're participation bars. They're looking for that scenario that we spoke of earlier, where the midpoint, which is that black horizontal line, needing to clear the high of the bar or the low of the bar for that matter. All right. So and they'll highlight that information to you in the historical, and that makes it a little easier so you don't have to spend your time looking back to see where did that happen at. You can absolutely read it in real time. This bar should turn red, where they went through it. So now we got to deal with this. Now this one will turn green on the bottom. So they're kind of, this is a no close bar. It just don't have the NC on it, and this will be the hard stop bar. So they're kind of, just kind of going back and forth on this right now. They can't get past this one for some reason, and you can kind of see how that's all working. So and I'll tell you this, the sooner, and I have said this in prior videos, we'll talk about the chart just for a minute before we dive into this information up here. I've said in previous videos, the sooner that they come in, the better your chances of it working. The sooner that they come in, the better your chance of working. The sooner it comes in, the better your chance of it working. So you need the sell pressure if they're going to move down. You need it to come in kind of immediate. The faster that it comes in, the much more likely the trade will work. Now, when you look at the chart scale, let me talk about chart scale before I get into the other information. The chart scale right here, okay, these are the prices that's represented on your chart. In case you're new to trading, you know nothing about trading, I want to tell you some simple stuff. Your frame, which is from the top here to the bottom here, okay, will always remain in front of you. And so, fortunate for you, even though they're trying to throw your timing off, they'll have to turn the market right in front of you. And so, the simplest way to go about this, and I am the pioneer professional of this method, the simplest way to go about it is, okay, we got to do majority. Let's do majority. Remember, majority is more than half of the total, more than half. And so if you can get them to remain beneath here, clearly that's just half. Okay. So if they can remain under here, that's more than half. So it should just keep going to the downside, right? So that's just kind of simple. And it again, I am the pioneer professional of this method, and it's really simple. Now, let's talk about, let me get rid of this information here. Okay. Let me get rid of this. Thought I did that, but let's get rid of that information there. All right. Now, let's take a look at this here. Now, trend, let me just kind of compress that just for a second. Trend is time. So, time is the continued sequence of existence and events that occurs in an apparently irreversible succession from the past through the present and into the future. That's what a trend is. That's what a trend is. All right. So, it's irreversible if they plan to stay in that direction. It's irreversible. They're not going to turn around. They're messing with you. All right. And that's the best that I can give it. Now, when it comes, these are a couple of other words I want you to pay attention to because this is important. Participation. Okay, is the action of the action. This is really important. This part right here, the action of taking part in something. Destiny. Now, this is another important one. The events that will necessarily, it's a necessity that it happens to a particular person or a thing in the future. Fate. Now, remember, I told you you're here by fate because I'm not using any deceptive behavior to get you here because I want to give you some priceless information. So I'm not going to pay you to learn. I'm not doing that. I'm not doing that because oftentimes you can see for yourself. No, the mass majority of the people that's here won't even, they won't support the information. They don't. They don't want to support something that helps them. And so why would I have to, essentially pay double? I paid to have somebody, I guess, promote the video, which makes no sense. I think the information is priceless. It'll get out there at some point. And then, of course, I'm giving you some free information and you won't even care about somebody else and say thank you and, have someone else find the channel. It's absolutely crazy. So I just want fate. I just want the people that needs to be here, be here. And those that's here and they're not really supporting the information, hopefully one day they'll wake up. That's all. And so Thought, now this is us. Really important that you understand this. This is us. Let me open this up so you kind of see how it's trading as it's pushing up. Thought, action, habit, character, and destiny. This is how our function work. This is us. Thought, of course, when you think, it's inside your head. There's no time. Once you put your thought into action, now there's time, and so time gives to you outcome. All right. So thought, action, really important word, because remember, these are participation bars. Participation is the action of taking part in something. So what is the something? We're going to talk about that. So thought, action, habit, character, destiny. We choose outcome, but we cannot control it. We trust in function. That's what we do. So when you go to work and you work your hours, you trust that the paycheck will come. You trust in it. Now you cannot control the outcome. They can delay your pay. They can, well, hopefully you don't, opt to not pay you, because then that creates a problem on their end. But you can't control a, the exact function of how it gets to you. All you do is you sign some contract saying that, hey, I'll do this amount of time, and then you pay me this. And so then you trust in the function, you're not controlling it. And so now the market is this. It's participants, all right? And we're participants, just not the ones that's creating the outcome and have designed the function. We're not those people. Okay. We're not those participants, but we are participants. We participate. But the participants, whether it be the institutions, or of course, conglomerates, people that's of course bigger than the market, than banks and stuff. They still got some people out here that can that can control some stuff now. Okay, so now if they're the participants that's running the market, let's just make it simple. They're creating the outcome. We when we choose, we choose outcome, but we can't control it. They're creating outcome, and they designed the function. They've worked on both sides of the fence. And here's the really interesting thing. They're involved in it. And so it's important that when you look at the chart, that you see where the participants, the real participation is stepping in. You need to see where that's happening at. And so if you can see it, I would hope that you'll attach yourself to it and then just do, what it is that they're doing. Just go with them. And so counter trending, very, very complicated way to go about it, unless you know what's happening. All right. So unless you know what's happening, very complicated way to go about it. So now let me grab something really quickly here, because I see them pushing up. All right. So let's just do this. Let's do this. No, I got the wrong thing on that one. Hold on. I want to do something really quickly while they're coming up here. Let's see if they can stay right under there. Let's just see. Or will they jump up above that and take off running? And then we're going to finish talking about this, and then I will let you go. Trying to make it simple for you. All right, so you got to know where they're at. That's number one. All right, so we want this midpoint here. This is all I'm doing. I'm taking a pivot here, taking a pivot. And you see that midpoint is beneath this pivot. So this will pretty much be your no close level up here. So right around this area here, should they want to reach up a little higher here. I know 930 came in. So 930, where are we at? I know we've been talking for a little while. So 930 is somewhere back here. So it's back here. They kind of took off to the downside. That's when we pulled up the chart. And now they're just kind of down here. So now if you want something a little bit closer, let's say you want something a little bit closer, we'll pick this apart too. Let's go with this pivot, because they had a pivot here. And let's see if the no touch method applies to this here. So they pivoted up, and I believe, yeah, that's pretty good. So yeah, that midpoint fell beneath this pivot. So you don't want to take the sell from here. You want to grab it and have your stop up here. And so they pull up, and of course, in this area here, and they respond. And I kind of get that too, because you kind of had that same effect. Okay, so you kind of had that same effect, but you have to know what they're doing to you. That's all. And when I say they, because I know there's people that like to look at the market as, of course, they're victims. But it's really simple. It's just you have to align yourself with the function, just the function. Remember, it's a function to this stuff. All right. So then they push down. Definitely, this mid is below this pivot. Okay. This orange line is below that pivot. So they're right here too. Pulled up into it, kind of respond. And of course, from here, Okay, you can kind of see that this mid is above this pivot here, so your stop would have to be down here. This is the no close level. They pulled down into it, they couldn't get it done, and of course they popped up and they went up higher. So 5 second chart. It doesn't take, of course, a long time for you to understand how markets work. That's not what professionals do. Again, I am a professional, been trading professionally for quite some time, I can assure you. And it's really important that you know how to use your level. Now we're going to get back to what I was talking about in just 1 second. Want to get yeah. So yeah, that makes sense. So you should be able to, at first glance. Let me show you this. I don't know if you ever paid attention to this. Let me show you this. Hold on. This is the purpose of why I created the channel right here. To share my experience of years, many years, condensed, digestible way, so you can profit immediately by understanding any market, any time frame at first glance. First glance, no sooner you see it. Now, let's get back to this. Okay, so you got, of course, like I said, all of the institutional participants, and of course, banks, all of the hedge funds, all of these different companies. Okay, that's in the market now, creating outcome. All right, they're creating outcome, and they have designed the function. So they're involved in it, and that's the most interesting part about it. That they're involved in it. If you work the job and you could be involved in the job and then create the outcome, the opportunity itself, and then design the function of how much you're going to get paid to, going to work probably wouldn't be that bad. But the problem is that you're not able to play all pieces. You can't be the participant. You can't be the one that's creating the outcome and also designing how it should all work. And so I want to make you just aware briefly, if I can, that this is what's happening. This is what's happening. And so this is what you're up against. Okay, when you place trades and you don't understand the market. So I want you to see you can lose a lot of your time, and that's kind of the purpose of why I did this anyway. You can lose a lot of your time trying to uh trying to trade markets. You can remember they're down here too. They're down here too. You see this big jump out of this right here. So let's see who's going to win. But now look at the chart scale. That's important too. Make sure, and we're going to get back to that in just a second. I'm trying to give you all this information so you can see it. That's all. All right. So that from okay. So yeah, hold on. Yeah. So yeah, that makes sense. Yeah, because we got to go with this. I don't use this because this here went below that. So we got to incorporate this as a whole move. It's like you got to remove the noise out of it. Okay. Now there's requirements to how I do things, but I'm gonna just give you just some basic stuff. All right. So they can come under here. They just shouldn't break this turn here, and it's kind of like one and the same from off the bottom, to be quite honest with you. But we need them above here if it's really going to work. We need them above there. So needless to say, I'm trying to make sure that it all makes sense for you. I'm trying to make sure that it all makes sense for you. That you got to see that your life, when you live it, the thought, the action, the habit, the character, you're choosing outcome when you implement the thought. The outcome is already attached to the thought, but you can't control that. We only trust in the function of the thought of I thought to go to work, and I woke up and I went. And so you trust in the function of being paid for the allotted time that you went, because that's another definition for time. It's an allotted portion at your disposal suitable for a purpose. The participants, the markets. Now we're participants too. It's just we don't create the outcome and have we didn't design the function. We didn't do that. And so you can see the reaction. You saw the reaction that popped up. So we're not, and so it all depends on how long you'll stay. And see, and that's the thing that makes what I'm trying to disclose to the public very important. It deals with timing. And I want to tell it to you in a way that if you never heard it, and that it's simple. That it's simple. It's not complicated. And I can assure you what I'm telling you for free, there's something else going on with this stuff that's so much more simpler to understand. But I just want to make sure that when you come to the channel, that you're able to take away some information that can immediately have you look at a chart and be able to pick what should happen. Because remember, the market was thought of, and here's the thing: it came out of the mind of someone. Okay, And of course, it has a process in itself. And so when they make trends, it's it's an outcome. It's an outcome associated with it. And it's again trend distance. And so, the function of getting there is what I'm trying to explain to you with the no touch, no close method. These are real participation bars. And so that's all I wanted to tell you. I just wanted to put that in front of you. And if you don't mind, just take the time, hit the like button, and care enough about someone else that they get the information. All right. So I wish you all the best with your trading. Take